Hey guys, welcome into this video. This is by viewer request. I'm going to do a video about how I built up my assets and how I've gotten started in the markets and stuff. So we'll start with my job history. So I first had a paper run when I was 10, had another one when I was about 11 or 12. Then my first proper job was at the age of 14. I was on youth wages, just recovering trolleys, just a trolley boy at a hardware store. And then I moved throughout the hardware store, just working among the different departments until I was 19, earning between $14 and $16 per hour. I reckon a lot of that kind of helped me with my home renovation, working among the different departments in the hardware store. I kind of got a bit of an understanding of the types of products and what people use them for, and stuff like that, but I didn't have any practical experience on how to use it or how to actually renovate a house. And when I was 19, I joined the New Zealand Army and I started doing my training for the first 7 months, where I earned around $33,000 per year. And following that, I moved up to $48K per year after the training, and then that's progressively just ticked up to current day. I'm at $56,500 per year. So not a very high wage, but I still managed to save a lot of my income, over half. So next we're going to talk about expenses and savings. So I don't really spend money on anything that I don't have to. I save all the money that I can. Every dollar that I get paid, I avoid spending and try and save. I obviously still have to buy stuff. I spend the absolute bare minimum. I always think about stuff for ages before I actually buy it, and I never dip into savings in order to pay for anything. Like even when I bought a new gaming computer, I didn't go into my savings. Yeah, super conservative spending. Before I bought my house, I was saving around 20 to 25,000 per year, which is over half of my take-home pay. Now that I've started investing when I was 23, currently 24. I no longer save the money, but I either spend it on renovations while I had the house to renovate, or I invest it into stocks and crypto. I should be building up a bit of an emergency fund as well pretty soon. So now I'm going to go over my net worth. So when I finished up my training for the army, I had only ended up saving about $2,000 over that period, and I spent all that money on buying a laptop. I needed a computer in Christchurch because my then computer was getting pretty old, and it was also in Hamilton. And yeah, so I bought a laptop and completely cleaned out my savings. But from there, that's when I started getting really, really good with my finances. Really, all I had left to my name was 13K in my KiwiSaver, and no other assets, and that was at the age of 19. The 4 years following that, until September the 30th, 2020, which is when I bought my house, the 4 years over that period, I managed to save and make 130,000 across my KiwiSaver, FlexiSaver, and personal savings. So that does include employer contributions and my own contributions into KiwiSaver, and FlexiSaver is essentially similar to KiwiSaver, but I put in a fixed $200 per pay over those 4 years, and then that was my forced savings. and then any other money I had left over, I would just put into my personal savings. So I was age 23, and I had 130k net worth to my name. Then I purchased my house for 420,000 with a 20% deposit, which was 84k. And yeah, my house is now increased in value to $545,000, which is insane. Due to the renovations that I did, I spent 30,000 on renovations, almost 30,000, and also due to the fact that house prices went up about 24% that year. I haven't yet owned the house for a year, but like 1 year ago today, house prices were 24% lower, which is absolutely insane. And mainly due to that, my net worth is now 268,000, which is split between 205k in house equity, which is almost 40% equity, 56k in stocks, of which I put in 43,000, so 13k in profit on my stocks, and 7k in crypto, of which I put in 2,000. So it's actually 7.5k or 7.6k. Oh no, 7,750 as of like right now. That's how much my crypto is worth. And so the 205k in house equity is based off of 84k deposit plus the 28k roughly on renovations. So it's not quite 100% return on the house in terms of return on investment, but it's a pretty big return. About 90,000 roughly made on my house. So yeah, I'll go through when I started in stocks. I was pretty uncertain that I would make any money. A couple of friends of mine who weren't specifically like well educated on what they were doing were kind of just playing around with shares. They didn't really understand like the full concept or what they were investing in. They were just kind of taking pot shots and stuff, closer to gambling. But it was enough like that the concept like interested me, so I made a Sharesies account and I chucked $40 into it, just so I could test it out with minimal risk. And yeah, I can't even remember what I chucked it into. It was just in like some ETF or something, and I just left it. It barely went anywhere. It didn't go up, didn't go down, so I just ignored it. And then a few months later, like maybe like 4 or 5 months later, the March 2020 crash happened. And I was obviously only on Sharesies, so I only had New Zealand stocks, and I just started putting all my money into stocks. Yeah, I just chucked a few thousand in, like real quickly, into New Zealand stocks, like Air New Zealand, Kathmandu, Hallensteins, stuff like that. I didn't know what I was doing. I just started buying companies that had fallen significantly from what their previous price was. And my theory was that even if they came halfway back up, like recovered halfway, I would have made a huge profit. And that's the whole no fundamental analysis whatsoever. Didn't know what I was doing. I just went for it. Glad I did though, and having the money in the market made me start researching, and my research kind of determined that it was much easier to find information on US stocks. So I started a Hatch account to invest in US shares just like a week after I started properly putting money into Sharesies. So I got into US stocks maybe like April, very start of April, and that kind of got me into researching the stocks and the companies that I was investing in and researching the market even more, so I gained a better understanding. So continuing on with that, like I was gaining confidence and knowledge in the market and the specific companies that I was investing in. The more thousands of dollars I had in, the more I found it easier to motivate myself to do the research, and the more I obviously understood. I believe this to be like a many years kind of game. Like over the years, you just kind of accrue the knowledge. So long as you're still interested in the topic, you just keep piling that knowledge on and become more and more experienced. And over time, I believe I'll become a better and better investor. And the more companies I like look into, more numbers I look at around the companies, the more I get used to like the PEs, price to sale ratios, and year-over-year growths and stuff. And understand what they should be priced at in different industries, ratios, and stuff like that. I still have a lot to learn, and I'm still just a beginner, but I'm getting more and more comfortable with the numbers. And I hope to continue that trend and just become more and more comfortable with understanding the financials of a company and get a better and better understanding of the business models and stuff over time. Researching businesses and how they're supposed to function and all that. I'm researching definitions and terms and stuff so I can understand specific documents and earnings reports and such. And that's helped me to kind of understand my aims and goals when investing. I tend to stick to growth investing and value investing, more so growth, but I think it's better to have both methods available for myself. And I want to get better at value investing and kind of get more comfortable with the numbers again, so I can pick out stocks that I think will go up solely based on the valuation that they're at today, not growth stocks, which I'm thinking are going to outperform in the future. But I want to hold both to have that large growth, but also a little bit of stability to the portfolio. I try and draw confidence from other investors, mostly from watching YouTube videos from like Meet Kevin, Graham Stephan, and Jeremy from Financial Education. I watch heaps of their videos. Some of them do property videos as well. I watch all of those, and I think it's easier. I don't really like reading articles about big hedge fund managers and stuff. I feel like there's a lot of reactive media in that space, which always kind of keeps you behind the trend. They always have to, because they have reasons they have to say certain things, and it's always retrospective. Like after Tesla falls heaps, they say, it's overvalued. We have to sell some because that's what people want to hear, that they sold it when it was high. But then they're saying it's overvalued now that it's dropped, and that stuff, like it's too political and whatnot for me. So I don't even like reading articles like that. Like I'll read the factual articles and I'll pick the facts out, but I don't like the kind of the opinion-based pieces. But I do like watching videos of what people are actually themselves investing in, because if they're doing it with their money, like they obviously believe it. They have that validity to what they're saying, the fact that they believe it because they're putting their money where their mouth is. So I like to watch as many YouTubers as I can to see people who actually have money in the market and see what they're actually doing with their money. Onto crypto. When I started in crypto, November 2020, I started out of FOMO. Everyone was making heaps of money, and so I just wanted to jump in. I'd previously tried to buy some Bitcoin a few years ago, but it was ridiculously difficult. I had to send driver's license photos front and back, and then it was denied for various weird reasons. They wouldn't let me buy the Bitcoin. So that ended up falling through. And yeah, between then and when I actually started in crypto in November 2020, there's a lot of brokerages, apps, and websites that are now available in New Zealand, which weren't back then. So I missed out on a lot of gains, and that also made me skeptical about getting into crypto because I had that view that it was extremely difficult to get into crypto because I had to send all these driver's license photos and request purchases, and I had to do it within certain time frames or the sellers wouldn't go through with it. But now it's easy as it's crazy easy now. One of my friends just got me onto Binance, and yeah, told me that it really wasn't that hard anymore, and so I installed Binance and started buying crypto. It was easy as I chucked in $1,500 over the course of a month or two, and that ballooned into $7,600 really quickly over the course of a few months. But then, as we all know, crypto had a big fall. Fell to 3,000, which is over half lost, which is pretty crazy, insanely volatile. But it's now back to around 7,500. As of today, it's actually 7,750. So I'm at literally all-time highs right now on crypto, which is a very nice feeling. Although my stocks are not there at the moment. Yeah, it's crazy volatile, but I believe the technology will do great in the future and it's going to become more relevant over time. Onto property. So yeah, after my initial training, started saving every dollar I could, saved over 100K in 4 years to where my net worth was 130,000, which included the 13,000 in my KiwiSaver from before that 4 years as well. And it also includes some gains from my KiwiSaver and FlexiSaver. So they're invested into growth funds, so they were making a return over the few years that they were, the 4 years that they were in there. So some of the money did come from there, some of it was already in 13,000 already in the KiwiSaver, and then the rest was my direct contributions as well as my employer's contributions into my KiwiSaver. I did a lot of research on how to make the most money from property. The four types of money you can make from property being cash flow, like renovating to get a sweat equity. Then there's mortgage pay down, and then there's just appreciation over time. So I wanted to go for all of them. Fell short on cash flow, but yeah, done pretty well regardless. So my first home was kind of just intended to dive in head first, do the best I could, and see how it worked out. And at the end, I would have a house at least, so I couldn't be too unhappy even if I didn't make money. But yeah, saved my deposit, done heaps of research. Meet Kevin was great for the renovation hints and stuff. Decided on the BRRRR method, the BRRR method: buy, renovate, rent, refinance, repeat. So yeah, bought the place, 420,000, 84K deposit. I renovated it, 28,000 to renovate it. Rented it out, $495 per week. And then that's where it falls apart. The rules around LVR, loan value ratio, changed while I owned the house. So previously it was just 20%. You needed 20% equity that you needed in all property, but they changed it to 40% for investors. So unfortunately that means I can't refinance, and hence means I cannot repeat this at the moment until I can save up another deposit or gain enough equity and have the qualifying income again. So yeah, put me back a bit, but I probably would have had to wait a while anyway because I don't have the income to qualify Yeah, kind of killed my plan a bit, but still going to go ahead, do the best I can, and hopefully my next place will be another renovation as well. Renovating the house. So I bought a house that needed a lot of renovations. It was not in a good state, and I had actually no idea what I was doing. Just threw myself in the deep end and yeah, gave it a shot. My theory was that I'd do as much as I could, and anything that I couldn't do, I'd just have to pay for a contractor. Obviously, there's like flippers and renovators out there who do this for a job, and especially a lot of flippers, they use all contractors. So my theory was, if they can do it with paying contractors for everything, that any bit of work I do myself, saving myself 100% of the labor cost. It doesn't quite work out like that because they buy different types of houses and they pay significantly less for them. I didn't really shop around that much. I was just paying what I could to get a house, but it still worked out because obviously, as we know, the property prices boomed insanely, ridiculous amount, 24% in 1 year, completely unsustainable. But yeah, I might actually talk about the property market in a different video, share my opinion on that, but not in this one. Yeah, I managed to figure everything out except for the plumbing. So I had to bring in a plumber. Obviously, there are certain things you just can't do with plumbing in its existing positions, like new toilets don't fit in with the same waste location of the old toilets, so that had to be moved. And then if you're putting a new toilet in, you want to hide the water pipe, so you got to move it so that it's behind the new toilet, and then stuff like that. I had a low pressure water cylinder, and it was going to make a whole lot more sense to just buy high pressure, so I could like future proofing for all the plumbing, so I could actually buy high pressure stuff. Like otherwise, you have to buy some very extremely specific um, stuff. Like you can't just buy any all pressure tap for a bath or a shower. You have to, especially showers, insanely difficult. Not only do you have to get an all pressure shower, but you need to make sure that there's no funnel points in the shower. So there's a certain diameter. It gets way too deep, but had to switch to high pressure anyway. And yeah, don't regret it. Total cost for the renovation was just over 28,000, and 5,000 of that alone was the plumber's bill. So renting the house, I'm just going to go through some of the numbers in this one as well. So bought the house, 420k, around 30k in renovations and costs. Deposit was 84, so of my money I'd put in 114,000. I then pulled out 10k in a mortgage top up, which leaves me with 104k in the property. In hindsight, should have pulled out more money on the house while I was both living in it and had tenants, because I had the flatmate income to qualify for the mortgage top up, and I also was living in it, so I could get it back, refinance it back to 20%. But I only figured that out when I no longer had the tenants, and I tried to take out another mortgage top up, and they're like, unfortunately, your income doesn't qualify, which is very unfortunate, especially considering I earn 56,500. Like, I don't know exactly what the average is in New Zealand, but I would assume that's around the average income. And this is in one of the cheapest cities in New Zealand, and I own the house by myself, which is a slight disadvantage. A lot of people own them together with people. But the fact that I couldn't take out the 80% of my current house right now is kind of ridiculous. Like, not ridiculous that they wouldn't give me the money, but ridiculous that the prices have gotten to such that it's unattainable for the average income to take out an 80% loan on a house. It's pretty crazy. But yeah, I now rent the house for $495 a week, which is a 5.72% yield. Considering the mortgage and rates, insurance, and property manager fees, I'm net neutral on this property. That covers all the expenses, and that's it. Doesn't cover maintenance, vacancy, or capital expenditure. So there will be times that I have to put money into this property in order to keep it. It's not a cash flowing property, unfortunately. Yeah, my thought process going into it, along with I'll just dive in head first, and I'm sure it'll be fine. I also had the thought process of if I don't have money, if I don't make money from it, then I don't have to pay tax. So yeah, I'll be down, but I don't have to worry about tax. And then if I do make profits, then it's okay because I have the profits to pay the tax. And that just seems like that was very logical to me. Like, make money, pay tax, easy, it's fine. But then the rules have changed, and mortgage interest deductibility rules are changing, and I will be paying tax even though I'm not making any money, which is very difficult. What money do I use to pay the tax if I'm not making a profit? But yeah, I'll be paying tax on the mortgage interest. I was going to have to pay tax anyway. There was going to be, like, even though I say it meets all the expenses, I include because the mortgage is principal and interest, so the principal pay down, I still have to pay tax on what's been paid down. Like, that's not an expense. So there's always going to be some tax to pay, even though to me it feels like I'm not getting any money in hand. In fact, I'll probably have to put a little bit of money in to keep a buffer in the account that all the expenses come, like the house account. But yeah, essentially in 30 years, I will own the house outright without having to pay for the expenses. I'll only get like the weird, unplanned expenses like vacancy, maintenance, and capital expenditure. But that's kind of an acceptable cost considering in 30 years I will have like a significantly greater income from the house when the mortgage is paid off, and it would like help me in my retirement and such. So yeah, I'm still happy even though some of it hasn't quite worked out. Other parts have worked out great. So yeah, I'm glad that I bought the house, that I did all the work, that I made that sweat equity, and I'm lucky the market went up 24% and I made a lot of money. Although I didn't have the house for that full year, so didn't get the full 24%. Actually, that's like the only regret I have is not buying a house sooner. So my plans for the future. I'm going to continue to invest in crypto, stocks, and property. I don't have renovation costs anymore because I'm no longer renovating the house, and I don't have the holding costs because I've got the rent to cover that. That means I can afford to put more money into stocks and crypto and start building up a deposit for another house. But I won't be able to qualify for another mortgage yet. So stocks and crypto, I'll just wait for good buying opportunities. If the market's overvalued, like large cap US stocks are at the moment, then I'll just leave it to do its thing. But if there is any companies that I want to buy that are undervalued, such as Corsair Gaming or Tattooed Chef, then I will be buying. With property, I'm going to have to wait until either I get some more equity or I can save another deposit, and until my partner has got a job in New Zealand where she earns New Zealand taxable income so that she can help me qualify for another mortgage, and then we'll buy the second house together. And I plan to do another renovation, like a live-in renovation, in order to gain that equity again. I feel like it's the best way to kind of get a leg up, like a big step up, as opposed to like the 7% per year, or even if you get like a crazy good rate per year on your stocks, you're never going to get that plus 90k from renovating a house and market appreciation on the housing market. So I feel like at my current net worth, it's very worthwhile to continue with the property. I'm also actively looking for other investment opportunities and assets and such. Looking into potentially starting a business, drop shipping, crypto mining, or anything else that I can kind of wrap my head around to figure out how to make it work. Haven't really committed to anything yet. Still kind of deciding, researching, figuring out what I would be best at. But yeah, there's a couple of options. I'd like to build up a secondary income, preferably something that doesn't have to tie up a lot of my cash. It's kind of like drop shipping, because then it provides cash flow to invest in other things, but doesn't require a large sum of my cash to just be sitting there like a house does or the stocks do. So yeah, hopefully I can get something going in that space. Why do I invest? My motivation. Money provides options. The option not to work, to freedom of movement, go around whatever country you want to live in, so you can, like, if you eventually get enough income sources and assets producing income, you can kind of hop around wherever you like without having to stay in one place, and you don't have to worry about being in the rat race for the rest of your life, just being stuck in a 9-to-5 job until you retire. I do not like the thought of that. I have no end goal to my investing. There's not really a number where I'll say I'm going to stop now. I'm just going to keep going. Eventually, hopefully, I'll be able to leave conventional employment and kind of focus fully on assets and potentially businesses and such. I hope to do that before the age of 40 and just use all my time to just continually build up my assets and cash flows, hopefully. At least that's the plan. Don't know how well it'll go, but yeah. In terms of percentage-wise, I've been doing pretty well this last year, and I hope to continue that. Just going to keep working hard, finding new ways to go about it, and yeah, just going hard. So, firstly, this is not financial advice, even though it kind of might seem like it. There's just kind of three main points that I find people kind of fall into these traps. So start now. Like, so many people just they say they want to get better with their finances, or they want to buy a house, they want to get into stocks, whatever, and they give up, or they don't start, they procrastinate, they think it's out of their reach, and they don't ever try to start. But yeah, you just need to start. Like, it's a bit tough with property and stuff, but like when I did it with the house, I just kind of threw myself in the deep end and I just started. With stocks, I just started small, obviously, so you can go more conservative. I just checked in $40 and I just started. You need to get started, obviously. Makes sense, right? You need to start. But you need to do it when you think of it. Not like, oh, I'll do it someday, or I'll do it when. Don't make these if statements, like, if this happens, then I'll do it. When this happens, then I'll do it. Just do it. Just now. Just do it. Part of that is building knowledge. So a lot of people, I've had a lot of people ask me, like, oh, what stock should I buy? And I'm like, I don't know, man. I don't know which stocks are going to go up. Like no one really knows. You can have an opinion, but like I've been buying Tattooed Chef and Corsair Gaming, and they just keep going down. Like when I first started buying them, I thought they'd go up. I didn't know they would go up, and they went down. So, got to start building that knowledge. Um, don't just ask people. Don't skip straight to the end goal. Don't try and just skip to the making money. Like build the knowledge. Get a qualification if you need to, if it's relevant. Gain understanding. Get some skill. Understand like everything across the board, like for stocks, like business, accounting, market research, and whatnot. Even a little bit of politics. If you're starting a business, get some leadership skills, software development, sales skills. Get like a range of skills across the board, and yeah, be proud of like doing well financially. A lot of people I find brag about like cars or cool gaming computer or something, things that aren't assets, things that lose the money, that they should probably be more ashamed of than proud of, because they're not doing themselves, like, not doing the good thing, like they're putting themselves backwards financially. Like it's not a great situation to be in. But personally, I think we should be proud of assets we own, how we're doing financially, and the future that we're going to make for ourselves. So yeah, talk about money, talk about assets, and attract intelligent conversation. You learn like some weird stuff that you didn't think you would by doing that. You learn about like different methods and stuff, and you meet like-minded people. Don't be ashamed of wanting to make money, and don't let people shame you for trying to do well financially. That one is kind of tough in New Zealand with the housing market. There's a lot of people out there shaming people for owning houses and especially investing in property. Going around a lot. Tall poppy syndrome. Yeah, there's a bit of luck. Bought property and it goes up crazy amount. But then, like I didn't choose for it to go up. I just bought a house. It went up due to factors, and then I made a profit from that. Like, and then people, yeah, there's some people that don't like that and they'll shame people for it. Or like, if I choose to rent my house out, there's people that shame me for that. That's my financial decision to make, and personally, I'm proud of the fact that I was able to do that. Sweet, that's all I got for this video. Thanks for watching. Leave a like and a comment and subscribe if you'd like to see more videos. Thanks for watching. See ya.